Hey there, Investorholics! Welcome to another ETF Spotlight review. Today we'll be taking a look at QPON, which is the Australian Bank Senior Floating Rate Bond. So if you're looking to earn monthly income combined with high level of capital stability from a quality portfolio of senior floating rate bonds issued by Australian banks, this one might be of interest to you, so hang around and check out all the information. Hey there, Investorholics, it's Scott. KrackTheSky Value Investing will be giving you up-to-date investing news and content. You can navigate the markets wherever you are. My mission is to give you the knowledge and confidence to take control of your financial life, expand your investment horizon, and crack your financial sky. Don't be afraid to give us a thumbs up and a subscribe. Okay, so QPON aims to track the performance of the index that measures the performance of the portfolio of some of the largest and most liquid senior floating rate bonds issued by Australian banks. This one, so the strategy here is, so eligible bonds must have amounts outstanding of at least $500 million and a term of maturity between 1 to 5 years, with up to 80% of the portfolio allocated to bonds issued by the big four Australian banks. We all know who they are. And up to 20% of the portfolio allocated to other major Australian banks. Y factor, regular attractive income paid monthly and expected to exceed the income paid on the cash and short-term deposits. So if interest rates increase, so do the dividends paid out by the fund, and obviously if the bank rates go down, your dividends will go down, so it's something to keep in mind. Capital stability, so Australian bank senior floating rate bonds historically have been high level of capital stability and limited capital variability in the equity market decline. So yeah, if you're looking to sort of have a bit of stability, this one might be of interest. Defensive characteristics, so floating rate bonds have historically exhibited low correlation to equities, as well as defensive characteristics during market decline. So inverse relationship. Historically, they've had an inverse relationship anyway. So we live in interesting times, and sometimes what happened in the past doesn't always happen in the future. So obviously, that's something to keep in mind when you're doing your research on this one. Okay, so we had a net asset value of $25.55. It's trading just above that at $25.58. Market cap of just over $500 million. Management cost here of 0.22%. Monthly distribution and dividend yields, sort of around the 0.8 to 1%. Obviously, as the cash rate goes up, that will go up as well. So that's something to keep an eye on. QPON holds a portfolio of senior floating rate bonds issued by the major banks, as I kind of touched on before. And if you're chasing the income, I think this might be something to look at. This one. So holding the floating rate bonds, that means it should be more responsive to changes in the interest rate environment. So I think now sort of what we're seeing, we're on an interest rate cycle that's going up. So I think you're looking at quite a few years before we start to see interest rates go down. So this might be something to keep your eye on and potentially put some money into as it gradually creeps up. But obviously, you need to have a look at how it's performing. So I think it's one to keep your eye on. So bonds are useful for investors seeking to preserve the value of their initial investment, as they typically have a lower risk and volatility than stocks, but obviously that's not always true. Okay, we can see here on the left hand side, we've got a lot of bonds here from the major banks: Westpac, ANZ, National Australia Bank and Commonwealth. Some smaller percentages held in Macquarie and Suncorp debt, or floating rate bonds anyway. Since inception, which is sort of middle of 2017, you've seen a little bit of capital appreciation, but pretty solid, I think. You know, pretty not solid, but stagnant, I suppose. And that's kind of really what you want to see. You don't really see too much up and down movement because this is a bond, so you know, almost 2% in capital appreciation. Yeah, I think this one might be worth looking at, but like I say, you got to sit back and do your research. Mainly because, well, I think it's mainly worth a look. You know, sort of a little, maybe almost buy, mainly because the interest rate's going up, and this one has an emphasis on the floating rate bonds. So I think your return, your dividend's going to go up over the next 12 to 18 months, and you know when an interest rate's going to come down. I don't think in the short term anyway. So I think this one might be worth a bit of a look. You know, obviously it's only ever, you know, sort of a balanced part of a portfolio, but something potentially to have a look at. Anyway, guys, I hope you enjoyed it. Give us a thumbs up. Thank you. Hey there, are you interested in learning more about personal finance and investing in the markets? If you are, smash the like and subscribe buttons down the bottom of the screen there. Crack the Sky. Value Investing will be giving you up-to-date investing news and content so you can navigate the markets wherever you are. Expand your financial horizon and crack your financial sky. Hey guys, I hope you enjoyed the video. Please give me a like and subscribe. Greatly appreciated. Thank you.